The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, folks, I'm going to have to suspend all of my the rest of the week's shows this week because I've been hacked by the Russians. So I've got to get that fixed, and then maybe I'll get back in the following few weeks here. But maybe I can get it fixed this week. But boy, there's a lot of hacking going around out there. By the way, I can tell you with 100% certainty that Mr. Trump is going to win the election, and the reason for that is my brother-in-law has never voted Democrat ever in his life, and he is not going to vote for Hillary this year. He's going to vote for this is the end of my rhetoric on the election, but anyway, it's amazing that someone who is such a staunch Democrat, and his reasoning was that he's not sure of the veracity of some of the stuff that goes on. Let's get back to the markets here. I imagine the folks on the networks are having a lot of fun because the ratings are absolutely going through the roof, which is good for all the advertising and everything. So we'll see what's happening here with some of these markets. The first chart that I posted in here is a graph showing the relationships of some commodities, to particular foreign currencies. And as you can see here with the one that we have here in the Canadian dollar versus the crude oil, this is the highest correlation of any commodity versus any of the cross rates that we trade. Now we're below the 44 level in crude oil, which is not good. That was a 61% retracement, and that looks like it's getting ready to break. We're also broke below the number in the in gasoline futures, and we've also broken below the low in the heating oil futures. So all of those are breaking down. There's only one last hope for the crude oil, and that is if we take a look here at this Canadian dollar chart on a daily chart, you're going to be looking at it over the past 2 months. You'll see that we are making a ABCD structure up here with a 3-drive pattern. That comes in at the 132.20 level. That's the level we just hit about 10 minutes ago in the Canadian dollar versus the U.S. dollar. Anything above 132.50 is going to send this crude oil spiraling down, quite a bit, I would guess. The next support would probably be down around 42 or 41.50 if it breaks that level. Now, we've had a question about the soybeans and the wheat. We had, and also corn. We had Rich Anderson on Friday. We had the potential reversal in the soybean market. Because we did have a pretty good rally of about 20 cents off the bottom. Wheat has been the big rally because wheat has rallied, well over almost 30 cents off the bottom, which is $1,500. That went from 406 to roughly 435. And also we've had a pretty good rally in corn, and considering it's the biggest of all of the crops, it makes it, look like it's going to be something that is really, really important here for a potential bottom, if in fact we do hold the bottom. Now, if you were fortunate enough to buy that corn down there when we were on the floor or on the show here, Monday at that 336 level, we did hit 334.5, which was $75, below the price that we looked at. So you would just put your stop at the 336 level and let it rip because, we have hit some major patterns here in corn, wheat, and beans. And this might work, it might not, but this is pattern recognition. We're dealing in probability, never certainty. So remember that's what we're looking at when we're watching these. So we're some real critical levels, as we are every week. Like we see when we come in, we always have something that's going on in the world. But the foreign currencies are the ones that are the really key to what's happening this week, in my opinion. And how I come to that conclusion is by taking a look at the composite, which is the U.S. dollar index. And if we take a few moments here to look at this, you'll see that as we come into this today, which is the 25th of July. By the way, the 28th of July is Ralph Elliott, so Elliott Wave technician guy. That's his birthday. Okay, now let's take a look here at this market in the U.S. dollar index. We have hit the 61% retracement off of the November high. That's one. We have hit the 78% retracement off the February high. That's two. And now we've made the 1.618 expansion of the June to July swing, which gives us three ratios. Plus, if you look closely, you can see that we have a perfect ABCD pattern here in this dollar index between May and June and July and August. It sets up perfect time and price parameters. So this tells us that we are at a really key level. Now, when you're dealing with the U.S. dollar index, you have to remember that 53% of the weighting in the U.S. dollar index is the euro versus the U.S. dollar. What this means is you can trade the euro versus the U.S. dollar as a proxy to the U.S. dollar index because the correlation is about 90%, I believe, because it is very, very high. And as we've mentioned many times, the really key level to look at is the 109 level. And, we'll be able to see what's going to, if that's going to happen. Unfortunately, we have too many comedians here in the Tiger Den, so we have to try to get through that area right here. So anyway, this is what we're looking at here in the U.S. dollar. We're seeing some very strong correlations. We've already had moves down in the Australian dollar and in the Swiss franc. They moved over $1,500 down into those points. The British pound is still in that trading range between 134 and the 128 level. The $64 question is it going to hold this 130 level? Because this is a key level that we've had several times here over the past few weeks. And if you ask me my opinion on it, it would just be a sophisticated guess because I just look at the charts. I'm not attuned to what the fundamentals are or what they're talking about. Once in a while, I'll listen to, what the pundits are saying, but, frankly, I don't understand it half the time because they're bringing in supply-demand statistics that, they're in the history books anyway, so you don't really know what's going to happen. That's one advantage of pattern recognition swing trading is it is, futuristic, looking at the markets. The problem is it doesn't work all the time, but it certainly works better than 6 out of 10 times, and that's not a bad batting average if you're in the National or American League Baseball, and it's a pretty good average if you're in the stock market too. So we'll look at that. Now, we've had a couple questions here about the volatility that we've not seen in just about anything. I mean, the markets are just completely devoid of any volatility at all. The only thing that we have is the fact that the volatility index held for just a very, very short time here this past week, and we were up a little bit, but really not very much to talk about. But we've had, very, very low volume in the stock market here, folks, and we'll cover the stock market when we get back. We've got a new Bradley model from our good friend Shane Smolian at wolftrader.net.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. And Shane Smolian of wolftrader.net, my co-author in the book that we did on astrology, forwarded on his Bradley model, which is a little different than the one I use. I use the regular Bradley model that Bradley published in 1946. Shane is a little more sophisticated because he weights the planets a little differently, which is probably the best way to do it, because the inner planets, your Mercury, Venus, and Mars and Jupiter certainly give some really nice hits when you look at it. But it's showing that we should be over a topping area. He also makes a comment in his letter, and you ought to take a look at that. That's Shane Smolian at wolftrader.net, www.wolftrader.net. You can get a copy of the newsletter and see what he's looking at, but he's looking at several different factors. But his main thing that he's been on our show to talk about is the fact that the Federal Reserve's buying of quantitative easing has been the thing that's been moving this market up. He showed us statistics. He's pretty much proven to the fact that it's done exactly what it's supposed to do. In fact, he's been on the show several times, and he's talked about 10:30 in the morning is when the Federal Reserve, usually that's when they do their additions into the market with quantitative easing. So you always want to watch that first hour, to see what's going on, and that's what we should be looking at today. Because if we're not going higher after the first hour, that means that the Fed is most probably not pumping stuff into the system, and we'll be able to do it. See, we live in a different world now, folks. We didn't have anything like this. We have a money supply that has gone to $4 trillion. Back when I was trading, when we had some type of normalcy in the market back in the 60s, 70s, and 80s, if our money supply moved up more than 2%, inflation would come in, and we would see a tremendous amount of that whole thing. So I've posted the chart of the Bradley model for the wolftrader.net into Tiger TV, so you could just take a look at it, because I do it for two reasons. One, he's very, very good at what he does. And the second reason is we are really not going any higher, folks, in the market. I know the New York Stock Exchange Index is lagging badly. If we take a look at this, and that's the thing that I watch because that's the real market. And you'll notice the high on the New York Stock Exchange Index was 11 days ago at July 14th. And as you can see, we closed at 10,805. We're probably going to be maybe a slight bit higher today. Look at the number. In fact, I've got it on my alert system in my charting package is at 10,819. Now, the old high was 10,810. Tom O'Brien said over a month ago that he thought it was going to get to 10,819. That's only 9 points off the old high. So watch that old high if it gets there, because if it stops, that's telling you that that 1.27 expansion of the whole move from June to July stopped right where it's supposed to be. Now, with the S&P, of course, we've gone to a 1.618 expansion of that, and even higher in the cash S&P. With the Dow Jones, we've gone right up to 18,600. That again is that same 1.618 number. So we're just sitting there at this level with virtually no volatility and virtually no volume. Folks, if this were a bottom and you turned it upside down, you would have to just close your eyes and buy, because that would be a sign that, something really dramatic is going to happen, and the odds favor, that it's going to reverse from what it's going. But there's also that probability that it could, explode to the upside. Now, I don't know what would cause that, but anything could happen in what we're seeing in the news. Now we have my lovely bride told me that there was another shooting this morning down in Florida, and boy, I tell you, it's getting a little scary out there. So we have to be able to see this. Someone's asking a question about the Bradley slide chart. I don't understand. Maybe you want me to put it in again. I guess that's what I'll do. Sure, hold on. Let me post it in here again so you'll be able to see it. But if you want the whole letter, go to www.wolftrader.net and ask Shane to send you a complimentary copy, and I'm sure he would, because he is a very nice young man, besides being very, very bright. So the key to watch this week is this foreign currency. We are especially watching the euro versus the U.S. dollar, which is also 53% of the dollar index, because we are there's about 9 different things to tell you to buy the euro and sell the U.S. dollar. But boy, the risk here is very, very small, because anything below 109 in the euro tells us that we're spiraling down, most probably to the 105 area, and we'll see if that happens. But right now, this pattern is set up perfectly. We're also seeing it set up perfectly in the Canadian dollar versus the U.S. dollar, which, as we see here on the first graph that we put in here, is that it has a better than 90% correlation, to crude oil. So Canadian moves in the same direction as crude oil. So we'll watch that one also very, very closely. Now, the $64 question is, what do we do with the gold and the silver? We've been down here several times. Remember that our key price to look at in the gold is at 1301. We've been down to 1310. After that, we rallied $25 up to 1335. The silver was able to rally about 50 cents off the bottom. We are trying to probe for a bottom in here, but the $64 question is it going to be this week, next week, or even longer out? Remember, the gold that we've looked at over the period of, these past, since December, when we had the 3 drive to a bottom pattern in gold, was, telling us that we were going to have a tremendous move. We did get to, up to 1377. Now, we are at a very critical level here in gold, and one of the things that we watch for is we watch to see how price swings repeat. And I put up here the last 8 months in gold, and if you'll notice those red boxes that you see, these are similar moves that we've had in gold, over the past 8 months. And if you go back and look, some of these, there's been 1, 2, 3, 4 of them. They've been pretty much spot on. The one in March missed it by about $8, but the rest of them were nearly perfect. And basically what they are, they're $50 moves. And as you can see, after we topped here at 377 2 weeks ago, we came down $50, but we haven't rallied very much. All we've been able to do is to get back to that old resistance at 1335. So the bottom most probably is not in yet. We need to watch that old 1300 level for several different reasons. And as we pointed them out many times, we've got some major 61% retracements from the Brexit low, which was down at 1255. So 1301 is what we're watching in the gold. In silver, that number comes in at 1880. And silver is very much 13. Mr. P, it is 1301 is what we're looking at. The old low was 1310.07 last week. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I can't remember the name of the reason why we're going to have a a guest on Wednesday. We're going to have Ed Carlson on. He's the gentleman who does the George Lindsay work from the Seattle Technicians Association. And then on Friday, I believe we're going to have Bill Koval from WDK Analytics. And then the following week, we're going to have Norm Winsky on. And then we're also going to have Bill Meridian from Vienna, Austria, is going to talk to us about some other cycle type work that he's working on that would have some interest for us. And we're also going to try to have Shane on that next week too. So here's the silver chart is what we're looking at. We were talking about gold and the importance of 1301 per ounce. Basically, we're looking here in silver over the past couple of months. As you can see, after the big move we had from $17 to $21.40, a move of well over $22,000 in a week, which is certainly an outlier event, but we have given very little of that back. As you'll notice on that first red box there on July the 8th, we did take out that low last week by about 2 cents. We since rallied up to 2010. Which was a nice retracement off of the high we made from July the 8th. So the key level here, of course, is this old low here at 1927, because usually when you attempt it the third time, it'll fail. And watch it very closely, folks, because that's a really powerful number in silver. What this means to me is the fact that even though we had this tremendous move of $27,000 in a week, the market has given very little of it back. It's only given a little less than 50% of that move back over a period of almost a whole month now. Now, if this were a major top, wouldn't you think that it would give maybe back 61 or 78%? But in fact, that's not what we're doing, and it's actually holding up, very, very well. We're seeing the same thing in platinum. Platinum had a tremendous move up to the 61% retracement on the weekly, and it has backed off. It's backed off more than, $25 per ounce, but still, that's not very much considering the amount that it moved. So these are the technical things that I'm looking at here, because, with the market in the world in disarray, pretty much like we see every day now, we have these things that could really be tremendous outlier events. And one of these happens, it's going to make some of these markets, move, very, very dramatically. And that could either be on the not metaphysical, but the geophysical, something like an earthquake or a tidal wave, something like that, or it could be geopolitical, related to, elections and overthrows of government and that type of thing. But with this volatility that we're having here is really something, that we want to be able to see, that's what we're looking at. So anyway, that's what we're watching so far this morning. So we'll see, what's going on, and just make sure that if you did buy the corn, make sure you put your stop at break even. That would be at 336 a bushel. And if you did buy the wheat, of course, that had a 25 cents profit in it. And that would be a really nice, we want to take some profit up in this area, and then use a trailing stop on the remainder of the position. The crude oil just didn't work. The timing is bad. Went below the 61% retracement. We had a profit in it almost all day on Friday, and actually closed in our favor on Friday. But today, it's taken that away, so we need to stand aside and take a look at it. If I were not already in the crude oil, what I would be doing is I would be looking to sell the Canadian dollar here because it's making a really nice pattern that we pointed out earlier. And remember, some of these patterns just flat out failed, just like we've just seen in the crude oil market. I mean, it acted pretty good for a while, but then it failed. Same thing happened in the heating oil. We weren't involved in that, but we had a failure in heating oil. We've had a failure in gasoline, and whether that's related to what's happening in the Canadian dollar, remains to be seen. So keep in mind that these patterns, they work part of the time, but they don't work all of the time. But there's nothing that works all of the time. So that's the key. It's all about money management and learning, how to try to do these things, without risking very, very much. You have to be able to have a belief system in what you're looking at, and that's what we try to do here, is to show you that these patterns do fail some of the times, but when they don't, they yield a lot more then they give up. So that's the key to looking at some of these things. So that's the main thing of what we're looking at. It looks like the crude oil is heading down here to the 42 level. That would be my next guess. And if that's the case, that would mean most probably that the Canadian dollar versus the U.S. dollar would probably go higher. Now, remember, the Canadian dollar market versus U.S. market is much bigger than the crude oil market. I really believe that, because you're looking at a future versus the currency for a very large, country. So I would assume that the Canadian dollar is the one that would be the key to look at with this. But we had a high here in the Canadian at 132. 24. We're trading at 132.09 now, but whether this turns it or not, we have to wait and see. Regarding the stock market, last night, right after the market opened, we did have a very, very quick move to 2172. It lasted less than about 5 seconds because the market quickly dropped back below the 2169 level. Then it rallied up from the low we had 2164 up to the 61% retracement again, right at that 2170 level, and now we've backed off. So the key here is the New York Stock Exchange Index has not been violated. It's technically looking as good as it possibly can be, and those are the things that I think are pretty. We need to cover bonds for our good friend Marshall here, and also our good friend Mr. P and Tucker. If you'll give me a second here, I will get the bonds up here. I've got them prepared. I believe the bonds are at really critical levels, as is everything else. It seems like every time we come in here, we're going to be looking at some of these things that are important. Now, we did hit. We talked about this trade that worked really well on Thursday, right at that 170 level. The low was, I believe, 170.02. We were looking to buy that at 170.08, and we had a pretty good rally, but we have not made a 38% rally. Now we're in the third day of the rally, and that would take us up to about the 173 level. But this is going to be a big key here, because if we get up into this area of 173 and then fail and go below 170, that's going to set up a very fast move, I believe, in bonds down about 165. And believe me, folks, the whole world is long bonds, with the exception of me and, well, maybe two other people. But this thing looks like it's made a major top here. We had a major 1.618 expansion over a 6-month time frame. So the key level is 170 in the September bonds. Watch that. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks. We're going to take a look here at gold on a 30-minute chart. We've been talking about this 1300 level most of the morning. Several times someone's asked to take a look at it under a microscope. So what we've done is we've gone down to a 30-minute chart. And as you can see here, if you look closely, you can see the 3 drive to a bottom pattern from July 14th into July 20th, and then to where we are coming in either today or tomorrow. I assume we're going to get very, very close to this 1300, and then also the 1.618 expansion of the last swing would take you into 1296. So you're going to have a window there between 1300 and 1296 that will look very, very, very interesting. But there's a lot of reasons to think that we could take this low out of 1210. The low this morning has been, 1310, has been 1311, so hasn't really gone anywhere, but it still looks like we're heading towards just right around that $1,300 an ounce level in gold. It's taken 3 weeks to get here, but we've been waiting for that number to come in, so it should be pretty interesting at that point. I've had several questions here about the crude oil because we were looking to buy that. I think that if you wanted to get back into the crude oil market, if you think this is the bottom in here, look at the Canadian dollar versus the U.S. dollar. That's been absolutely perfect today. We had a high at the high of the day today. We had a perfect 3 drive pattern, and you know, we've haven't really sold off much. We've sold off about 20 points, but watch that one because that one is working better than the crude oil market or the heating oil market or the what we call the not natural gas, but gasoline futures. Okay, now we're going to take a look here at the NASDAQ because here again, we've had a market that's been up at the same area. It looks like it's hanging in there by vapors, given the fact that we have virtually no volatility up in here, nor do we have any place where we have a any volume occurring up at this level. So we are setting right at the 127 number, which is 46.60. We closed at 46.58 and a half. We opened about that same level. As you can see here, we have taken out the April highs. Now the pattern that you see in there, that is not it's not a Gartley pattern, it's not a butterfly pattern, and it's not a 3 drive pattern. It's just a pattern where we have 2 symmetrical triangles that measure to the ratios of what we're looking at. So that's primarily of the thing that we're looking at right now. That's in the NASDAQ. But folks, we've only got a little bit of time left. But the key today is to look what's happening, with this U.S. dollar, because the dollar is the one that is that really controls all of this stuff. And that's the one that you want to be able to say that it looks like we could have a situation where we could, have a pretty good move in the dollar index, because we have so many numbers in that U.S. dollar index. I'll go through them again, because you don't see this many coming together, all perfect numbers at the same time. And then you also have a butterfly pattern that I didn't draw in because it would have been too cluttery, and I didn't want you to not see it. But if we take a look at this, you'll notice that it's basically it. Someone's asked a question in the den about the IWM, which is the small cap. It's been here for 11 days, folks. Just like the New York Stock Exchange Index, it's gone nowhere for 11 days. No breakout to the upside or anything. It's only been the few Dow stocks and a few of the S&P stocks, and of course, a few of the big NASDAQ stocks that have been able to make some of this stuff pop. But the rest of the market is not nearly that bullish. I mean, it hasn't gone down yet, but we'll wait and see. We have a question from our good friend Scott down in Tampa. Dr. Scott's asking about the possible 135 pattern in the euro, and he's absolutely correct. We have that working right now. If you'll give me a second, I will put up the euro chart so you can look at it. And you'll be able to see that we've had this ABCD pattern that is formed twice now. We have two of them coming in at the same price there at that 190 level, 109 level. So you can be long this as long as we don't get below 109.50. If we get below 109.40, then that would tell us that we're most probably getting ready to head down to that 105, 104 level. But right now, you have to be in a buy in the euro, because that's the exact opposite of the dollar index, which is a bearish Gartley, and we have a bullish pattern in the euro. So this is the key here. Now, if they fail, then that's when you've got a really big change in trend coming. So 109.40 in the euro. That's an extremely important number. But right now, the euro is at major support, as is the British pound. The whole key to that thing, folks, is that U.S. dollar index, based on, looking at these patterns, because we have so much stuff telling you that this could be it. So the risk-reward ratio here is very, very small in going long the euro. Usually you have to risk 60 or 70 pips. At this particular level, you don't really have that. So we had a tiny bit of a sell-off in the market starting out, not really very much. The bonds are up very, very slightly, and crude oil continues to go lower, as does the heating oil and also the gasoline futures. Okay, now one other question someone's asked is about the chart of Amazon. If you remember, Mr. Z, who's one of our premier traders in the Tiger Den here for TFNN, had been talking about this 757 level in the Amazon, and it hit that about 2 weeks ago. We've never taken it out, even with all the bullishness that we've seen in some of these indices. It's really not done very much. One other comment I want to make, and that's about this volatility, folks. If you go back historically, look at volatility. When you get it going into new low ground, like we have it last week, this is highly suggestive that we're going to see something in the market reverse. So the $64 question is when. And I think there's another question that has to be offered: is how much do you have to risk to see if that's right? Well, I think anything above 2172 in the S&P would most probably tell you that, yeah, there's something probably not right here, and you want to be able to stand aside and see if the market will give you another level. But at that level, we get above 2172, something is certainly wrong. Now we hit 2171, 75, I believe, and you've got to give it a point or two. Don't put it exactly at 2172. I'd say give it 2 points, 2174 and a half. That would probably mean that the New York Stock Exchange Index is also breaking out, but it hasn't even made a high from Friday. It actually opened lower this morning, so it's been here for a long time. The market has, and the main market is the New York Stock Exchange Index. It's not the Dow, of course. That's only 30 stocks, and they are price weighted. They're not cap weighted, and that's a big difference. Whereas the NYSE is several thousand of the largest stocks, domestic and foreign. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and one of our friends here in the Tiger Den has tried to put my feet to the fire and ask me what I think is the best trade for the day. And if I had to say that, I would say it would be here in the Canadian dollar. We're at a really key level. We backed off about 25 pips which is $250 from the high, but I still think this could be the one that would be the most interesting. And we talked about this starting out, that this has a very high correlation to the crude oil market to the tune of about 90%. So if you're going to go into this, you basically would be looking to go long crude oil at this level. And believe me, that is not an easy trade to do because we did break below the coveted 61% level at 4,400, and we're trading 80 cents lower than, well, about 70 cents lower than that right now. But on a point for point basis, that Canadian dollar trade could be very, very interesting. It would have about a $1,500 profit in it versus a risk of about 400. So that's right around 4 to 1, which is very, very good. The probability on it would be 7 out of 10, because when these three drive patterns occur like this, they have a 70% chance of winning, which means they also have a 30% chance of losing. And focus on the amount of money that you have at risk, not how much money you can make, because the key to trading is to focus on your risk, not on your profits. Winners think, how much money can I lose? Losers think, how much money can I win? They're focusing on the wrong thing. Focus on protecting your backside, because the probabilities are there on all of these trades. The problem is they're all probabilities. They're not certainties. Just like shooting golf or playing baseball or basketball. Nobody hits 100% of their free throws. Nobody bats 1,000 in baseball. In fact, if you bat 333, you're probably making 50 million a year, because there's very few hitters nowadays that hit above the 300 level. So this is the same thing that we're looking at in trading. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.